A financial rapture is taking place as we speak, ladies and gentlemen, and those who have assets shall be saved, and the people in the fiat kingdom shall be left on earth to have the vials poured out over them. Welcome back, ladies and gentlemen, for another jam-packed daily market update. This is an important one because what we've been putting forward is a very bullish outlook for the markets. We're going to be reinstating that and linking that to my opening statement in regards to if you don't own assets, you are going to find yourself sliding further and further down that wealth pole. Certainly right now at a time when fiat proliferation is likely going to accelerate or continue to accelerate, and assets are going to continue to gain in value. We are seeing assets break out across the board. We're seeing stores of value like gold and silver really start to move. Silver potentially breaking out of a pattern that it's been in since 1980 or 70 or something like that, following Bretton Woods, where it had that major move. Bringing up Bretton Woods, there's a great change with money going on globally with the embrace of cryptocurrencies and a kind of another Bretton Woods moment taking place that's going to mean everybody's life, if they use money, gets impacted. And I think that's going to result in the devaluation of money, in the acceleration of assets as the emperor starts to realize that he's naked. And the emperor here is really the debt system that we live on. So this is a really important one. We're going to just set the bullish tone and give you our projection again for the macro markets using the S&P 500 that we think has gone through a bear market. We think the yield curve's also played out. I've not seen anybody talk about that. The 10s and 2s yield curve has played out, in my opinion. And that was the Trump crash. That was our bear market. We've now got a bull market ahead of us. We also think this throws out with the bathwater the 4-year cycle. So quite a multipolar one in regards to macro and crypto, but it's all linked and correlated. And it's important that people own assets, certainly in times like the one that we're in, where there's changes happening structurally with money, and assets are going to do well, and that means they're doing well against the fiat systems, which if your wage hasn't increased, you need to protect yourselves against the game that is being played on you with the fiat systems. And Bitcoin really is, and we can all give it a lot of credit for this, a great eye-opener to the fiat systems. There's that meme out there, Google's how does the Fed work or money work, and then Google's how to buy Bitcoin. Everything is Bitcoin at this point in regards to against the fiat systems. Bitcoin was just specifically designed really for that task, or it wasn't originally, it was designed to be a peer-to-peer currency, but that narrative was totally hijacked, and now it is just a store of value. Bitcoin is not a currency. Can you use it as a currency? Sure, but it's not a practically implemented currency. There's less people using Bitcoin as a currency today than there was 10 years ago, I would bet. Anyway, let's get into it. So first of all, the US government is shut down. And how remarkable is it just how well things are going? We are now on track for the second longest government shutdown in US history. This is from Kalshi. Breaking the government shutdown is now forecasted to last 3 weeks. Nearly 700,000 federal employees are working without pay. Wow. And what's the probabilities of them going back to normal because they need that pay and ultimately all of this getting resolved? Probably quite high in my opinion. So I don't think this is any kind of a catalyst for downside. We've given a very bullish outlook for the markets. Certainly after the S&P 500 recovered, and you can see my cursor over here, the Trump sort of tariff slammed down to the tune of 21%. Now we've said, and Mike Wilson from Morgan Stanley was the one that turned me on to this. We've said that you've had your bear market. You've had your yield curve play out, by the way. That was the tariffs and the pullback that we got from that. That's the yield curve playing out. Post yield curve, you're in for a good time. Post a 20% technical bear market, entire recovery, you're in for a good time. And that is historically the case going all the way back. We could go even further, but going all the way back to the 1980s. So you have the shortest period is here. 485 days the market rallied, having recovered the 2020 sort of lockdowns. And that's the shortest one. In fact, no, sorry, I stand corrected. Following 2018, it was 395 days. So to go just, let's say, 300 and 80, whatever it is, 380 days or 390 days, that's going to take you into sort of August next year. So I think your markets run for at least that long, potentially a lot longer, certainly if there is changes monetarily going on, which I believe there is. And I think that's why we're seeing fundamentally what we're seeing with central banks dumping treasuries for gold. It's kind of showing a distaste for the debt system and an embrace of a newer, perhaps one, or a different form of holding value. You're seeing that technically with gold really going on that run. It made all the targets that we had for it. And silver's about to break out of a major pattern. What's the context of silver breaking out? Why is that happening? I don't think it's necessarily demand in regards to industrial usage that's going to drive that. More demand in regards to an escape to the fiat systems. People always talk about $1 million Bitcoin. What's the context of the world that we live in when Bitcoin's $1 million? It means that most people's wages have been completely whittled away and they haven't inflated to the same degree that the money supply has. So they've been getting significantly poorer. This is the road to serfdom. This is the reality of the situation most people are facing right now without even knowing that this is happening. You are getting poorer if you don't own assets. If you own assets, you're at least keeping up, hopefully overperforming if you're in the right class. If you want to find out what I own, do become a Patreon. The money proliferation. If you don't, you just get poorer and poorer and poorer. And it's getting to that point now. The great leveling isn't about collapsing everything. It's about creating people that have and people that have not. And it's going to be very hard to arbitrage up and down that ladder, certainly given just the acceleration that we're seeing. And like I say, the reason we're showing all this, and this is very relatable to crypto, is because we're in a great time for markets. Based on this, based on a number of things. You could even use BTC dominance rolling as a good indication or indicator of what the S&P 500 is going to do, as crypto is a higher beta. If the S&P was selling off, that means Bitcoin would likely be selling off. That means the altcoins would be selling off even more. So Bitcoin dominance wouldn't be rolling. The fact that we think Bitcoin dominance is now in phase 4 is an indication and a correlating factor to what we're expecting for the S&P 500. Subscribe to this channel, guys. Nobody gives you this technical breakdown anywhere. And if you want to take it a step forward, become a patron. Strap into Sunday's meetings. We give you our overview every Sunday, including how we're positioned, of what we think is going to happen with the markets. Anyway, Bitcoin dominance we think now is going to roll. That backs up what we're saying for assets. Again, people getting poorer if they don't own them. That's what's happening here. There's literally a road to serfdom being laid out in front of people. And what we're seeing with some governments around the world is a propellant towards that serfdom class. And The Road to Serfdom is a good book by Frederick von Hayek. Hard read though, I would say, certainly. That was my own opinion. Maybe that makes me an idiot, I don't know. But it took me a few times to sort of get my head around all of it. And I listened to a lot of people sort of talk about the book before I sort of fully understood it. I didn't get that from reading it the first time. But Bitcoin dominance is going to come significantly further down. I think this is just a bear flag that you're going to break to the downside of, and we've got that based on this head and shoulders 55% target. Again, what's the context of the S&P in the world that we live in? And it's interesting. We also think that others versus BTC, so the ratio total market cap excluding the top 10 to Bitcoin, this is about to break out just like it did preceding the last bull run. And that's kind of correlates with BTC Dom. It also correlates with the fact that from where we are today, and everyone's highlighting this cup and handle now, aren't they? We think the total market cap, excluding Bitcoin, is going to do 278%, at least to 6.4 trillion. We think the total market cap, excluding Bitcoin and Ethereum, is going to do slightly better. You're looking at a 290% gain. But others, which is really yet to sort of complete its handle, is going to do 821%, which means that you are going to see that move supported by BTC Dom, supported by the direction the total markets are heading in generally, supported by where Bitcoin's at, and we did say this is just continuation. People going short, you just run into some resistance here, by the way, on the shorter time frames. In a bull market with leverage, ding dong, why do it? Makes no sense to me at all. You're only going to lose money. And also in regards to the S&P, and I'll probably show you this on this, I actually think the IWM is going to perform really well against the S&P, which is a generally bullish environment. So it's a very bullish setting for people that own assets, which essentially means that rich people just get richer. And I want everybody to be on the right side of this, not the wrong side. Not doing anything is a choice. I'm not telling people to invest in crypto or anything like that. Do what you want. Crypto's a lot more volatile, a lot more risky. A lot of people, in my experience, just can't handle being in crypto. Certainly the downside. The good side, of course, everybody loves. But when it gets tough, and this is why people don't make that life-changing money, because they can't bear to accumulate during sort of bases of markets where that range can consist of 70% moves either way until you eventually get that breakout, which we've just had for altcoins. But doing nothing in a time when assets are going to accelerate, which means that if you don't own them, you are getting poorer because they're accelerating against your fiat systems. Doing nothing is a choice. And you're choosing. I can't tell you how many youngsters I've got into investing 3, 4, 5 years later. They're sitting significantly further than their peers in terms of that wealth ladder. Countless. Even some of them weren't interested in crypto. They get some silver every month. And they've been doing that for the past 3 years on a month-to-month basis. The Richest Man in Babylon was probably a great book that impressed that on me. Everybody should be investing, even if it's a tenner a week, tenner a month, £50 a month, whatever it is, because that will accumulate. Put as much in as you can. And ultimately, the reason you're doing that isn't to be greedy, but it's to protect yourselves from the fiat systems and have something outside of it that is going to go up in relation to them. We're not even talking about the fact there's a major change, a kind of Bretton Woods-esque moment that could see assets do really well that we're expecting. You know, I could throw up the S&P versus USM2. We're about to really not just outperform money creation, but or maintain our value of money creation. We're about to outperform it massively. Anyway, enough of that. It's a very bullish environment we're going into. People need to hear that message, guys. If that's one thing I want you to take away, it's you need to own assets. Choose what assets you want. You don't just need to invest in what I do. We're not saying you should. Make your own minds up. Let's talk about the week that we got ahead of us. It's going to be interesting to see how the government shutdown stuff comes. It's the 4th or 5th today. This week, I'll do a longer video on it. The FCA are enabling people to buy crypto ETNs here in the UK. That's previously been not the case. Stupid rule, because you could buy it on Coinbase. You couldn't buy a BlackRock custody ETN. That's going to happen this week. I think on the 8th of October. We'll see if I can actually put that in a stocks and shares ISA. That'll be very interesting because that essentially equals tax-free crypto. No capital gains exempt if you take advantage of your 20 grand ISA, which me and my community typically do in the form of stocks, and our stock portfolio doing spectacularly. It's outperforming the crypto market in many regards. Anyway, enough of the bragging. The month ahead, or the week ahead, sorry. Tuesday, we've got Canadian IV PMIs, US crude oil inventories, FOMC minutes. So this is going to be interesting to see what the look ahead is. Speech from Jerome Powell. That will also be interesting. We might be streaming that if we can. US initial jobless claims. And we've got Canadian employment report and US Michigan confidence. Earlier this week, I did show a chart, and it was a rather interesting chart. And what it shows is the introduction of ChatGPT and the breaking of the correlation between the S&P 500 and job openings. Whether you're into markets or not, you need to understand them and understand when changes happen like that one, because it shows a shift in the world that we're living in. That's why we love the markets. I mean, truly, I love what I do here because it gives you so much insight in regards to the world. The world is a financial machine. If you can understand that machine, you're going to understand the world and why people do what they do really well. Anyway, that's it from me, guys. I'm going to love and leave you a bit of a taxing daily market update, but some important messages in there. Generally, it's a great time for assets. We continue to reiterate this view and have been bullish really since we got back into the markets at the start of 2023 and fought off the doomsdayers and are still doing that every single day. What people, I think most people, 98% of people are on the side of everything's going to crash and it's going to be awful. Eventually, perhaps. I'm on the side of they're going to continue to do what they've been doing and devalue people and relegate them into this class of serfdom and basically have the haves and the have-nots. And that's this kind of hollowing out that we're seeing. You know, you look at the middle class, so on and so forth. You can be on the right side of that equation. I can't change the world by owning the assets that the rich people do and owning assets generally. And when I say everything is Bitcoin, what I mean by that is the same reason Bitcoin's valuable really applies to everything. outside of the fiat systems, providing there's, some sort of a relative value proposition there, like housing, housing really, people talk about overvalued house prices, overvalued stock markets. You're not comparing it to the money supply, which is really just kept up with. That's it from me, guys. I'm going to love and leave you on that note. I'll see you all in tomorrow's Daily Market Update. Thanks for watching, guys. See you soon.